watching Businessworld Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day, Friday. Moody's Analytics sees Philippine economy to grow slower than expected this year. That's on the back of the surge in COVID-19 infections.
The IATF places 4 areas under the more restrictive alert level 4 until the end of the month.
The government is now looking to expand its Res Vacuna sa Botica vaccination initiative outside Metro Manila.
And the BIR vows to ramp up its campaign against tax evasion this year. We begin our broadcast with Moody's Analytics trimming its growth forecast for the Philippines this year.
And the think tank says their revised outlook takes into account the impact of the Omicron-driven surge in COVID-19 cases on economic activity. Now, Moody's Analytics expects a full-year GDP expansion of 5.6%. That's lower than the 6.4% forecast it gave back in October 2021. The revised outlook is also lower than the government's 2022 growth target of 7 to 9%. Now, Stephen Cochrane, chief economist for Asia Pacific at Moody's Analytics, says domestic in the Philippines and Thailand, domestic activity at that has been hurt due to mobility restrictions. Cochrane also says the Philippines and Australia are seeing steep surges caused by Omicron. He also notes that the Philippines and Indonesia are more prone to downside risk brought by more restrictions due to relatively low vaccination rates and less expansive health services.
And speaking of tighter restrictions, 4 areas are now under the strictest alert level 4 classification. This takes place today and will end on January 31st. These are Kalinga, Ifugao, Mountain Province, and Northern Samar. Meanwhile, the IATF also placed more areas under alert level 3. These include Apayao, Puerto Princesa City, Masbate, and Siquijor. Several areas in Mindanao are now also under alert level 3. These are Zamboanga del Norte and Sibugay, Lanao del Norte, Davao de Oro, Davao Oriental, North Cotabato, Sarangani, Sultan Kudarat, Surigao del Norte, Maguindanao, and Basilan.
All right, happy Friday, Dan, and let's do hope that we get to end it on a good note. But let's kick off the market report with a focus on the local unit amid those Fed tapering concerns and oil price spikes. What's the latest there?
Okay, so a lot of things going on when you look at the currency space. And just as you mentioned, Jess, it's such a balancing act. You can see on my terminal here the peso weakening a touch. That's at 51.43 to the greenback. And you did mention oil. Let's take a look at those prices. Take a look at the 1 month chart here of that commodity. Today it's down finally by $2.42 per barrel, but it's still above 83 per barrel. That's already 12.7% increase in the price of oil in just 1 month. But there are other things, circumventing this impact on the peso. There was a yuan fixing yesterday. So basically, China's central bank set a daily fix for the yuan at the strongest level in 3 years. Plus, they lowered the borrowing costs after the central bank cut their policy rates and also pledged more easing to stabilize the economy. Recall that they did come out with the GDP figures, which were disappointing to many investors, and they said that they needed to put some more stimulus there. And this, according to Irene Chung, she's a strategist at ANZ in Singapore, this partly contributed to gains in our regional currencies, wherein the peso was leading. Another thing that analysts are saying is that the peso has risen straight for 5 days, except for today where it's having a pullback, was basically because the cases of COVID are continuing to ease. Another thing that the Bangko Sentral is saying, this according to Central Bank Governor Ben Diokno, he's saying that the peso will be reflecting the economy's long-term or long-run macroeconomic fundamentals. He says there's manageable inflation, good fiscal position, and ample reserves. Still, if we take a look, this year so far in 2022, we've already lost close to 1% against the dollar, which is the steepest decline among major currencies. Now, if you're still interested in investing in alternative forms of currencies, there's still, of course, Bitcoin. And this from Union Bank, they plan to offer crypto trading in a bid to future-proof their business. They're saying that the average Filipino investor will likely hold 3 to 5% of their assets in these digital assets like Bitcoin in 5 years, assuming markets are stable. That's around 1 to 2% right now. So they're looking at 5% of our portfolios will now be crypto, most of whom are young people who get this earn tokens from play to earn virtual games, Jess. Hindi ko alam how to play those, but apparently a lot of Filipinos are earning Bitcoin from there. Now let's take a look at our market open, a bit of a slide here, down 0.2%. To 7227. This comes after we followed already yesterday Wall Street's decline after the Nasdaq's correction that was down by 10.7% from its November 19 closing high. And here to chat with us, we have Rastine Mercado of China Bank Securities. Hi, Rastine. Happy Friday.
Hi, good morning, Danny. Happy Friday.
All right, Christine. So a bit of a pullback, which is a bit surprising considering we've reported a couple of straight days of lowering cases, confirming a downward trend that is going on. Some are saying we're gonna follow South Africa as fast as Omicron came, as fast as it went away. Why the negative sentiment?
Well, I think investors have been pricing that in the recent weeks. That's why we saw that rally from 7,000 to 7,350. So I guess it's really right now we're actually we're trending sideways, which is good. We've been more resilient compared to U.S. market. So I guess inflation concerns on inflation, as you mentioned, monetary policy, and then of course earnings growth prospects. Those are the things that investors are kind of digesting. It's just that, of course, global investor sentiment isn't that good, especially in developed markets, because as we all know, developed markets have been the strongest over the past 2 years, right? So expensive valuations are a problem there. For us EM markets, we actually haven't been that much in vogue over the past 2 years. So we may see some near-term weakness as, of course, global markets sell off. But I think investors will start to look at relatively undervalued countries and stocks, of course, when the dust settles. So I think there is opportunity there in terms of value versus growth. Of course, we see investors moving towards value now, given that uncertainty remains high.
Okay, so playing catch up and the developed ones are, have already been there, done that. How worried are you about this oil spike? What is driving this? Is this actually a good sign, meaning that, the global economy is getting stronger? Is this, supply side driven? And how should we, be treating this here in the country, and which stocks might be most concerning?
I think it's more demand driven, right? You have global economies kind of moving away from hard lockdowns, so mobility restrictions aren't that much in vogue now as compared to the previous 2 years. So I guess really the problem here is how it'll affect inflation, of course, your supply chains, right? So rising input costs, as we all know, is going to be hard for manufacturers, particularly if they'll be able to pass on those costs to consumers. So I guess those things are keeping us a little bit on the defensive for now. But then, in terms of inflation outlook for the Philippines, domestically at least, the right now what we're seeing, what a lot are saying or seeing is that it's going to be relatively less of a concern this year compared to last, right? So hopefully that continues to be the case. But of course, it remains fluid, right? Global supply chains looks like the recovery there is more protracted. China experiencing a wave of Omicron infection. So I guess it really remains to be seen how that will pan out over the next few weeks.
Okay, now still on the topic of energy, shifting over from a non-renewable resource, so oil, towards renewable energy. So that's been all the hype, especially in the Philippines. You've got, the City Correct coming up. You've got Solar PH here already up at 1 peso and 70 centavos. And you've got ASEN launching their 60 megawatt wind farm in Vietnam. How exciting is this prospect? And when you take a look at, how these stocks have been, is there room to run? How do we price this considering that the projects are still a lot in the pipeline?
Well, I mean, over the past 2 years, it's been evident that there's a lot of excitement in the renewable energy space, right? Especially as ESG considerations continue to gain traction among investors. So, investments in the RE space is actually the future of energy, right? So, fund flows early in the game isn't too surprising. Like fund flows going to these stocks, even if the pipeline is still some years ahead. Even if valuations appear a little bit frothy at this point, it's a secular story that we think will continue to gain more traction as the years go on. Specific to like ASAN with their new project coming online, completion and operation of offshore projects provide a testament to their strength of execution. So this opens up more prospects for them to capitalize on other offshore RE opportunities. We have new REITs like Crete, which have returns in fixed lease rates, plus windfall from additional revenues from its solar portfolio. So valuations on its solar assets might play a bigger part in investors' considerations. And of course, it'll attract specific set of investors, especially those with ESG considerations. SPNEC, as you mentioned as well, additional infusions provide a healthy pipeline for value accretive prospects. It's in a good secular space. It's hard to know what valuations will be at this point, pending, of course, valuation reports that they're supposed to come out with when they do formally do that. But it will likely attract traders and investors as speculation runs high in the stock.
Yeah, just on that, no, on solar Nueva Ecija, I mean, from 1 peso to 1 peso and 70 centavos, it's almost doubling here. Is this, sentiment driven, speculation driven, or is there really fundamental, bid for this? Are you surprised at this jump?
I think it's not too surprising. I mean, it's technically cut in terms of if you know what your pipeline is for solar assets. Of course, there is still some things to be ironed out on the from the regulatory end in the sector as a whole. But I think it really with that move from kind of moving out of traditional thermal energy sources and pushing into renewables more and more. So I really think it's just that that secular story means that there will be growth built into it over the next years.
And for Citicorp, their REIT, no, 3 pesos and 15, dividend yield 5.7% for 2022. That's according to some analysts, 6% for 2023. Is that attractive enough if you compare it to other REITs in the market? I mean, you've seen MREIT that jump, but of course, it's not the same type of assets. Or are you comparing it to, SPNEC, ASEN? How are you treating this? And are investors going to be interested in this REIT, considering there are other solar assets already in the market trading?
Well, I think it in itself, the structure is provides like a specific set of exposures, right? So on one end you have your fixed lease rates, on the other end you have the variable the variable income. So I guess if you want a mix of both worlds, then Crete provides that opportunity for investors, right? In terms of where it is, it's in a good space, it's in a good industry, right? So I think investors will kind of pay more attention to that, right? Valuations for its solar assets might actually move higher as the whole renewable energy story plays out over the next year. So I guess it really is just up to you. I mean, like it's good to also have that kind of fixed lease rate in terms of dividend yield that goes to investors, right? So I think that's something that it provides that kind of stability as well as possible windfall from, of course, the growing RE space.
Okay, and finally, just on the mining counter here, nickel, jumping to decades high here, and take a look at the oil counter, mining counter rather, 17.18% up in 1 month. Mark Ventures up 50%. How much further can this go, and what's your outlook on these commodities?
Well, I think commodity prices will continue to run high. If you look at the reason why these prices have been rallying, it's because of its supply is really kind of tight at this point, right? This is tied to favorable demand prospects. I mean, like kind of pivoting a bit. This is nickel prices. Nickel is also used in batteries, so which is a component for electric vehicles. So there's also that secular story kind of buoying demand. Of course, as global economies continue to recover, more construction for infrastructure or business capex is going to play into that. So more stainless steel means more demand for nickel, right? Additional supply isn't that easy to come around. I mean, like you do have to build that capacity. And then Indonesia, which accounts for a quarter of the world's nickel reserves, is actually has export curbs, and there are plans of new export taxes, right? And they'll be key market drivers. So I guess short supply and then higher demand obviously will lead to maybe protracted elevated prices for nickel specifically. So, but then as the global economy recovers, base metals, of course, will continue to be in vogue. So demand for that is going to be robust.
Okay, so justifiable surge here when it comes to those nickel miners. Thank you so much for those insights, Racine Mercado, China Bank Securities.
Thank you for having me.
Here are the other headlines we're keeping our eyes on. The Transport Department expects the construction of PNR Bicol, or the South Long Haul Project, to start within the first quarter. Now, this is the first contract for the design and construction of the 380-kilometer railway was signed on January 17. However, the DOTR is still seeking Chinese bidders for the rolling stock package of the 142 billion peso project. Plus, they are also preparing to bid out the three remaining contract packages for the PNR Bicol line. Once operational, the PNR Bicol is expected to cut travel time between Manila and Bicol from the current 12 hours to as little as 4 hours. It will span 39 cities and municipalities, 4 provinces, and 2 regions, with a total of 23 stations.
The BIR is eyeing to prioritize its campaign against tax evasion and improve voluntary compliance this year. Now, the agency says its enforcement and advocacy office plans to emphasize the criminal nature of tax evasion in order to have a maximum deterrent effect on taxpayers. The agency is also planning to simplify taxpayer compliance by identifying unregistered businesses through third party information. For this year, the BIR targets to collect 2.4 trillion pesos in revenues at 17% higher than last year's 2 trillion peso goal.
Now, coming right up, the ADB warns that unemployment may persist even after the economy rebounds.
More of that and other stories when Business World Live returns. Stay with us.
morning. You're still watching Business World Live. I'm Jess De Los Santos.
And I'm Danny Laurel. The government kicked off its Res Vacuna sa Botica initiative yesterday that's starting with only 4 pharmacies in Metro Manila.
Now, officials say they are hoping to expand this initiative nationwide very soon. JC Cosico with a story.
Tents and chairs were set up at the parking area of this drugstore in Malate, Manila. This is for the triage, as select pharmacies begin rolling out COVID-19 vaccines on Thursday. The initiative is dubbed Res Vacuna sa Botica. The actual administration of the shot and monitoring will be done in the pharmacy. To avoid mix-ups and overcrowding, regular customers and vaccinees were placed in different queues. The main vaccine area was placed at the side of the drugstore so as not to affect regular operations.
Hindi naman kayo naabala.
Hindi naman. Hindi, maluwag na ngayon eh. Dahil kunti lang yung tao.
Vaccinees welcomed the systems in place.
Mas magiging accessible po after ng vaccine dose. Dediretso na rin po sa mga pharmacy. Meron na pong accessible na mga medication for it.
The health department assured that those who will administer the shots underwent training.
They are trained to first and foremost observe the entire process of vaccination, from registration to education and counseling to finding out if they have existing comorbidities to the actual vaccination.
Duque said their service will also be free of charge. However, walk-ins are not allowed and vaccinees must pre-register. The number of vaccinees a drugstore can accommodate will depend on the number of registrants. As of now, 7 pharmacies and clinics are participating in the initiative. The government is also looking into expanding this to nearby regions and eventually nationwide.
Sasamantalahin natin yung kanilang presensya sa mga iba't ibang mga lugar, lalo na yung mahirap abutin ng ating mga kababayan, yung kanilang mga vaccination sites. Pero kinakailangan pa rin may tamang sukat yung lugar na kung saan isasagawa ang bakuna sa butika. Dahil hindi mo pwedeng maliit.
Pharmacies, for their part, have also been coordinating with their regional counterparts in support of the initiative. As of January 19, over 56 million have been fully vaccinated, while more than 5.6 million have gotten boosters. For News 5, JC Cosico, we are One News.
The ADB says the pandemic will have long-term effects on the country's employment that will last even after the economy rebounds. ADB senior economist James Villafuerte says that despite recent improvements in the country's job situation, the unemployment rate is still above the long-term trend. This, according to ADB, led many Filipinos to shift to informal and precarious work. Villafuerte notes that unemployment has disproportionately affected young people, women, and low-skilled workers. He adds the digital shift will also require higher value-added skills that could increase the mismatch between expertise needed by employers and the skills of displaced workers. The ADB suggests that government to strengthen labor market programs to help workers and enterprises transition to higher value skills. Now, talking about job generation, the outsourcing sector remains a pillar of the Philippine economy as it keeps millions employed. To find out how they still manage to capitalize on the pandemic to increase their workforce, we have Florette Navarro, Head of Global Recruiting and Senior Vice President of Human Resources of the IGOR Group in the Philippines. Good morning, Flo. Thank you for joining us.
Good morning, Jess.
All right. So again, at the start of the pandemic, the sector was really bracing for a contraction, but was surprised that things still managed to go uphill. Was it also the same for ICOR growth-wise?
So, the pandemic obviously affected all industries, right, including the BPOs. But to our surprise, ICOR managed to grow 20% in the Philippines, and in particular in Visayas, we managed to grow more than 30%, which was out of our forecasted numbers. So that was a pleasant surprise. And of course, it gave a lot of improvement to the community that we serve.
Wait, just to clarify, by growth, you mean that's a number of employees? Or
Yes,
talking
that's
about
right. So the number of employees that we have.
Mm-hmm. Now, Given that as well, how much of a game changer was the pandemic when it comes to work arrangements here for ICOR?
Oh, it is definitely a game changer. So prior to the pandemic, it was unheard of that a lot of the industries, frankly, not just the BPO, we had very tight limitations on even encouraging people to work at home, right? But when it comes, there was no playbook on how to manage businesses given the pandemic because no one knew it was going to come. But at ICOR, we are so proud that because of our technology and the intention of the leadership team, just by 7 days after the lockdown in March 2020 was announced, we were able to migrate about 10,000 of our employees to work at home because our main priority is employee safety. And 7 weeks after that, we have about 18,000 working at home, which is essentially more than 50% of our total population in the office. So we're pretty proud of that.
Okay, for how long do you see this hybrid model persisting? Especially, this of course comes with challenges for when you have to fortify your infrastructure.
Absolutely. So, as a company, our decision is really it may stay for good because with or without the pandemic, there are other things that we should consider, right? ICOR believes that our mantra is really bringing people closer to their home. So by having work at home, they don't have to worry about, commuting for a long time and, all the expenses that come with it. But more importantly, it gives us the flexibility. Like, for example, productivity is higher, absenteeism is lower for work at home. So there are really tangible benefits that we are getting with this hybrid model. So we're really a big proponent of this hybrid methodology for a long haul.
Okay, Flo, circling back to what you said earlier, it did mention 20% nationwide in terms of growth and then 30% for the Visayas alone. How much more are you looking? What drove that, and how much more are you looking to employ for the year?
So let me comment about what we think drove that, right? When the pandemic hit, it is not only the Philippines that was impacted. In fact, the impact to our US consumers and clients was, if not equal, much more than the impact to our country. So we saw that there are challenges in hiring drove our clients to even send more volume and work over to the Philippines. So one, that is a key driver in how we have seen things unfold last year. But at the same time, we're very conservative year on year. We forecast and we hope that we're going to get about 8 to 10% growth. But I'm also forecasting that it will be more than that, particularly in the Visayas and Mindanao region for 2022.
Okay, given that you mentioned the focus would be more outside Metro Manila, especially in the Visayas and Mindanao, why is it important to tap talents in these regions?
So, I have to take a step back. So, ICOR, we have been, in this business since 1999. However, we're one of the few centers who early recognized that, being outside of Metro Manila is key to our business. So, as of right now, out of our 16 centers, we only have one center in Metro Manila, and it's in Fairview. The reason why we're in Fairview because we want to capture, the talents coming from Bulacan. So to answer your question, it is really, really significant to invest further in Visayas and Mindanao. First, because you are bringing jobs to the market that years ago, nobody would have thought that that market is going to grow from a BPO perspective. Number two, they have fantastic talent, right? The values of the people from Visayas and Mindanao aligns very well with the Icorian values. And number two, it is really easy to work with them, with the government, and with the associations that exist in the provinces. So I really think that it is a symbiotic win-win situations for us. And we are, accepted in all the provinces that we work with. And that's really fantastic from both business and employees' point of view. And we continue to invest in our employees as well.
Okay, but is the climate going to be a factor here, especially as you expand more into regions? I mean, our calamities, of course, from what we have experienced last year, you have Typhoon Udet. Is that going to be a bit of a hold up for ICOR when it comes to expanding in the regions?
I don't think it's not gonna stop ICOR because when you're in this industry, business risk is always a part. So calamities, pandemic, we always make that part of our business operating model. So having said that, you just need to have a clear plan on how you're going to tackle if it happens, and we keep it fresh. We keep our communication lines with our employees really set up. We strengthen our technologies as well. That's the reason why we are able to migrate, right? In 7 days, we were able to migrate 10,000 employees was because we are ready, right? So we will continue to have that open mind and really be stronger in action.
Okay, one other threat, of course, for the sector, artificial intelligence and chatbots. I mean, it continues to hang over the sector's future. How are you future-proofing for this?
So we have invested so much on systems and as well as IT talents at IGOR. And I can tell you, I am from the HR group, right? And we are very fortunate that even in HR and recruitment, there are heavy investments in technology. So we are a company that believes that technology is not going to decrease our value. In fact, it is the opposite. It can increase our value because that's what clients are looking for, right? It's not just to add more employees to pick up the phone. It's really, put the easier type of phone calls, route it and solve it with technology, and reserve the tougher phone calls for our agents to take on. So it's definitely a heavy investment from our part. And even on the, it's interesting that you asked that question. Even on the recruiting side, we do have chatbots and systems and platforms and also AI that we are operating with.
All right. I think, again, hoping, of course, for the best for IGOR. Again, it's quite bullish outlook here for the year. Thank you very much, Florette Navarro, Head of Global Recruiting and Senior Vice President of Human Resources in the Philippines of the IGOR Group. Thank you, Flo.
Thank you. Bye, Jess.
And that's the first look into the business day this Friday, January 21st, 2022. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are Blue News.